What's up, tax savers? We're bringing you back to the classroom to do a side-by-side comparison on tax reform and kind of a really rough how S corporations fare versus C corporations under the new tax rates, because there's a lot of hubbub around the low 21% flat C corporation rate. And how it works is I want to show you how it looks with the two side-by-side comparisons for someone who makes $100,000 of net income. Now, these numbers may change as you go up and down for way high or way low. Haven't run that yet, but this is just someone who makes a cool 100K. So under an S corporation, they're now going to be their personal, the S corporation, your income is passed through to your personal tax return and you pay it on your personal tax level. So someone who makes $100,000 is going to be in the 22% tax bracket under the current new tax reform. So on that, they'll have a W-2 of $30,000 and then a net income to the business of $70,000. As we talked about before, the S corporation pass-through income gets a 20% deduction. So that means on that $70,000, they get a deduction of $14,000, which means their net business income on that is $56,000 plus the $30,000 in the wage. So they've got $86,000 of income. On $86,000 of income, because of the way that marginal tax rates work, they'll probably pay around 15% of tax, effective tax on that. So you're looking at around $12,000 or $13,000 in tax for an S corporation who makes $100,000 of net income and pays themselves a $30,000 wage. On a C corporation, they make the same $100,000 in the business. They've got a flat tax of 21% at the corporate level. Keep in mind at the S corporation, there is no corporate federal tax. And these are just federal numbers comparing states. It varies by state. So at the corporate level, there's a 21% tax. So that's $21,000 clean off the top to the corporation. And then when you pull the money out as a dividend, you have $100,000 of personal income tax at about that same effective 15% rate. So another $15,000 in tax. So you're looking at $21,000 in corporate tax plus $15,000 in personal tax for a total federal tax on that 100K of about $36,000. Not a great deal when you look at that same person in an S corporation at about $13,000 in federal tax. So some of the initial readings I'm looking at says that C corporations might be a good bet for the people who are very high income earners. I don't have those numbers yet, but someone who's in that $100,000 to $200,000 a year range, it really makes sense for the S corporation under the new tax reform plan. So, and then of course, using that low wage but a justifiable wage strategy, because as you can see, if we had this $100,000 and it was all subject to a wage, they wouldn't get that $14,000 deduction. So I guarantee this is going to be an increase in audits for not having officer compensation in the coming years. So if you've got any questions on this example or want to see more of these, drop it in the comments, let me know, or hit that like button, and we'll see you next time.
Just relax. It's too chill out here, man.